Most people glance at their paycheck for one number: the amount that lands in the bank. The rest of the paycheck looks like a confusing list of small labels and numbers. So they ignore it. But that small piece of paper or digital statement quietly tells the story of your real income, your taxes, your benefits, and your future savings. Learning to read it properly is one of the most useful career-long financial skills. At its core, a paycheck has three big sections. The first is your gross pay, which is the total you earned before anything was taken out. The second is the deductions, which include taxes, retirement contributions, insurance premiums, and other items. The third is your net pay, which is the amount actually deposited into your account. Most people only look at the third part. The full picture is much more useful. This matters because gross pay is what you actually earn for your work. Net pay is what you actually keep after various automatic decisions are made on your behalf. The gap between them can be significant. Knowing where that gap goes helps you see how much you really earn, how much you contribute to your future, and what you might be able to adjust to improve your finances. To understand how it really works, picture your paycheck as a small assembly line. Money enters at the top as your earnings. Different stations along the way remove specific portions for different purposes. Some go to taxes. Some go to retirement accounts. Some go to insurance plans. Some go to other agreed-upon items. What remains continues to the end of the line and lands in your bank account. Let us look at a simple example. Imagine someone earning a gross amount of $3,000 for a pay period. After income tax, retirement contributions, and an insurance premium, the net pay might land around $2,200. The difference of $800 is not lost. It is going to specific destinations, government services, your future retirement, and your protection. Knowing the destinations transforms how you view those deductions. A common mistake is treating every deduction as a loss. Some deductions, like retirement contributions, are actually savings going to your own future. Some, like health insurance, protect you from significant financial risk. Some, like taxes, fund services you may use directly or indirectly. The deductions are not a single shrinking force. They are several different things, with different purposes and very different long-term effects on your wealth. There is also a hidden risk in not reviewing your paycheck regularly. Mistakes happen. Old benefits may continue charging when they should have ended. Tax withholding may be set too high or too low. Pre-tax accounts may be set incorrectly. Even small errors, repeated across many paychecks, can quietly cost or owe you a meaningful amount over the year. A short monthly check protects you from years of small unnoticed mistakes. A useful way to picture your paycheck is as a financial map of your career. Each line shows where your time, energy, and earnings flow. Some lines feed your present life. Some build your future. Some protect you from risk. Reading the map regularly helps you see the route your money is taking. Without reading it, you are driving without knowing where the roads actually lead. The map is small. Its information is large. A second key idea is the difference between pre-tax and post-tax deductions. Pre-tax deductions, like certain retirement contributions, reduce the income that is taxed. They lower today's tax bill while saving for the future. Post-tax deductions come out of money that has already been taxed. Both have their place. Knowing which category each deduction belongs to helps you understand your true cost of contribution and your overall tax position. A practical example helps. Imagine increasing your pre-tax retirement contribution by a small amount. The visible drop in your net pay is often smaller than the actual contribution, because some of it would have gone to taxes anyway. This is one of the quietly powerful effects of pre-tax accounts in many countries. The contribution feels lighter than its full amount because the tax saving softens the impact on your monthly net pay. Beginners often misunderstand year-to-date numbers on a paycheck. The year-to-date section quietly tracks how much you have earned, contributed, and paid in taxes since the start of the year. Watching this section is one of the most underrated financial habits. It can quickly reveal whether you are on track to meet retirement contribution goals, whether your tax withholding looks right, and whether your total income matches your expectations. There is also a psychology angle. Some people avoid reading their paycheck because the gap between gross and net feels frustrating. Others avoid it because they fear seeing something they do not understand. But reading the paycheck is not a punishment. It is a small act of awareness. The numbers do not change because of your attention. What changes is your ability to make better decisions across the rest of your financial life. A simple practical rule helps you build the habit. Every payday, take 3 minutes to look at the paycheck. Check the gross pay, the major deductions, and the net pay. Glance at the year-to-date section. Verify that nothing surprising appears. Notice any changes from the previous period. If something seems wrong, ask your employer or payroll team calmly. This small ritual builds awareness without disrupting your day at all. There are things to avoid. Do not ignore unfamiliar line items, since they could be old benefits or errors. Do not assume your withholding is correct year after year, since life events change tax situations. Do not let pre-tax contribution settings stay forgotten for years. Do not skip reviewing the year-to-date totals. And do not panic over a single confusing number without asking your payroll team for clarification first. A better habit is to do a full paycheck audit once a year. Look at every line. Check whether contributions and benefits still match your current goals. Verify your address, your bank account, and your withholding. Ask if any new options have appeared that you might benefit from. The yearly audit takes a small amount of time. The accumulated value of catching mistakes early and optimizing early can be significant over a career. Over the long term, reading your paycheck regularly quietly improves your entire financial life. You become more aware of your real income. You catch mistakes early. You make smarter choices about retirement contributions, insurance, and tax options. You spot opportunities to negotiate raises or adjust benefits. None of this requires being an expert. It requires nothing more than a few minutes of attention each payday and a calm yearly review. So here is the short version. A paycheck has 3 big parts: gross pay, deductions, and net pay. Deductions include taxes, retirement contributions, insurance premiums, and other items. Pre-tax and post-tax deductions affect your finances differently. The year-to-date section tracks the bigger picture. Reading your paycheck regularly helps you catch errors, plan better, and make informed choices. The small habit is quiet, simple, and quietly powerful. If you have never carefully read your paycheck, start with the next one. Look at every line. Ask questions about anything unclear. Decide whether your current deductions match your goals. Make small adjustments where useful. Build the habit of reviewing each payday. Over a career, this simple ritual quietly produces better financial outcomes than many more complicated strategies, simply because it keeps you connected to the most basic source of your income.